Good morning. Happy Friday. So markets continue up. Obviously, we got a crazy gap reversal from that sell-off, and almost jokingly. Hold on.
Happy Friday.
During in the letter, saying as the markets went up a couple of weeks ago, it was like 4,000. Last week was 4,100. I said, well, this week 4,200. Did I really think it was going to happen? It was a thought. Anyway, it certainly looks like it's within the realm of possibilities with yesterday's gap up and close, and of course the reversal in the NASDAQ that sold off. So the next whole number up there. So as far as SPX, assuming that is what's going to happen, and you can see the futures are up here a bit, that this continues to push higher. At the moment, I don't think it makes a whole lot of sense to sell calls up there. You sell 4,200 and it doesn't pull back from there. Obviously, you got a problem. But 4,210, you're on the other side of 4,200. And well, 45 cents by 60 cents. It's not terrible. Oh, shoot. I didn't switch to the charts. Hold on. Sorry about that. There you go. So I was saying, 4,200 up here, and the 4,210 strike is 45 cents by 60 cents. However, I'd much prefer if this is going to continue higher, and we'll see if there's any faltering, movement on the upside when we look at the futures. You could probably get above 4,210. So obviously assess the situation and see if it does pop up there, because then there's going to be, some bigger premiums further away. Okay. So down below, surprisingly, so let's assume that it goes up, right? And that becomes a possibility. On the downside, 4,120 is like right here. So you can see it's a significant support level. Now, what I would look for in that case is what if it doesn't go up, or whether if it starts up at the open and then it's a breakout failure and it comes down to the support here is where people are going to want to buy. Right? And our job is to assess how many, at the time, what kind of reversal happens, how does it get there, so on and so forth, what time of day it is when it gets there, relative strength, weakness, what's the ticks doing, all the stuff that our brains process intraday there. So if it was to get down there, well, then we can start looking down below. And if it goes down fast, right, versus a just slow prodding move to the downside that it eventually gets there at 1 o'clock, that's not going to be a good scenario for premium down below. But if we get a sell-off into like 10:30, that's rapid, well, then maybe we can go down and look down below. So you have to make an assessment there. I really don't see great opportunity here either way. This little sideways action that started up. So it appears 4,200 is certainly within striking distance. So above that level. And as I said, down below. Now, as far as this trend goes, this is what we spoke about a week or so ago, right? Maybe 2 weeks ago, where, we were thinking, was the market possibly topping out here? And it was like, okay, it's in an uptrend. And then we got our, internals gave a sell here, and then they got bullish here, and we've had this big run. And one of the themes we've talked about is acceleration. an acceleration, prices moving away from price support. And that was the theme of the moving average lesson on the chart of the week last week. And so while the moving averages were explained as a visual aid, it was all about acceleration in prices that precede a sizable pullback. So, how long can prices go up without retracing? Well, long time, beyond what would seem normal or logical to us. But anyway, as they do move up away from those moving averages and become more vertical in their ascent, the greater the probability of a pullback. So it's just an odds thing that at some point prices are going to pull back because they've gone up too much. And this is the kind of pattern that precedes that happening. Now, does it happen in 4,200 or does it happen in 4,300? I don't know. Right? So we just watch this, and this looked like the turn, and then it gaps up and it continues higher, and that's bullish. So this was just a red bar ignored, looking a lot more ominous on the NASDAQ, but you know what happened there. And lo and behold, look at our sentiment. All of a sudden, these option traders aren't loading up. I mean, intraday, I still see numbers down below 0.6, but into the close there, I mean, these are relatively low numbers historically. But, this is kind of just dropping off these older numbers. And, need these option traders to really get excited about this move and get this thing to spike up. And of course, the breadth is really nothing to be bullish about with a market that's going up like this. But as we know, this is a market where money rotates rather rapidly. And so when everything starts moving together, you have a greater tendency for this to poke up. So while it's close, this isn't into the upper band. So our internals aren't giving us any edge here as far as, while this appears to be up a lot, it can go higher. Right? So we just keep following bar by bar. Right? Yesterday's low was our first reference point of support. Breaks below 4120. Well, something really bad would have happened if it closes below that. Other than that, uptrend, uptrend, uptrend. All right, futures, right. Slow, but pushing higher. Move that up there. You can see a momentum move. And this is the factory work. Momentum move. Oh, it's going to pull back, maybe significantly. Wait, it just created a pivot. Maybe it's not going to pull back. Buyer showed up at the pivot again. So this is what's called creating support. And this is part of the thought process in MTS of that. Oh, this is the pattern, pivot. It's going to pull back. Where's support? There's a little here, but probably a pullback into this area makes a lot more sense. Maybe that's not happening. It created a pivot. Now there's a retest. Now there's a red bar ignored. So you see how the thought process is forced to change based on the concepts. So bring this support level up under yesterday's low since there's all this congestion there. Breaking below here intraday would be something to pay attention to intraday as far as what happens on the daily chart. The process. What's this up here? It's up in the upper 20% of that bar from yesterday. So no big deal. If it breaks there, then we see, if it wants to come down here and then buyers step up again, that's the factory work. If it was, just a matter of if this, do that, everybody be a billionaire tomorrow. But we got to do the work. This is beginning to accelerate. YM. Same story, going higher. What's to stop it? It's an uptrend, it's an uptrend, it's an uptrend. It's starting to get a little extended. This is kind of more controlled, like a lot of overlapping bars. Moving averages are starting to pull apart. So that tells us risk is increasing, but no break as of yet. Let's take a look. This was the bear sandwich, as Dan calls it. And I said this jokingly, right? When we discussed what the market was doing on this day at the end of the day. And I think it was Debbie that had asked about some, okay, things are going to whatever pull back in a bigger way. And I was like, maybe. I said, but this market's crazy. I said, can you imagine if tomorrow negates that red bar and it's a bear sandwich? Lo and behold, that's what happened. And so now, look, the ideal scenario for this pattern, right? So one of the things we talk about in MT Live and, of course, teaching the courses and in the green room is that we have multiple concepts that make up our method. One concept doesn't create a trading strategy. So this bear sandwich after a greater than 100% retracement could be a continuation pattern with lower odds. Whereas if we were to get a bear sandwich after they move out of a consolidation, that would be a fantastic entry point. So this one is one in which, I think this will work. I'll share size it under the low with a smaller position and see what happens. So, there is candlestick patterns, there's locations, there is size of retracements, there's relative strength and weakness. So those that try and get you hyped up on some magical candlestick pattern or Fibonacci, whatever, that is not make a strategy. Right? It's about understanding multiple time frames, trends, and so on. Russell. Yeah, that could be a put spread today. If it expires today, it's kind of in a mess. Maybe it could even be an iron condor if there's juice up above here. This has just been a big mess. It's sideways up here. IWM, pivot here. This will become a pivot on another when this day is complete, assuming that it doesn't go down here. So, this is forming a trading range, and you've got the pivot high up there. And so if there was premium in strikes above here and below there, that's a strategy. It makes sense based on the pattern. And you got to see if there's premium. Bonds are down a little bit. No big deal. They've been bottoming out here for a while. Little pullback there, which means interest rates popped up. So, look at the 50, sellers at the 50. There's a pivot high up there. So, not that I think anything is going to happen today, but based on this bottoming action, we certainly do not want to, unless you want to see the market go down. Anyway, bonds break down below this level here. Cool. All right. So the 10-year kind of inching up there, little bottom action. And, this has got a big void up above, but it is in a downtrend. And this was, a lot of momentum to the downside there that broke down from a base. So while these bottoming type of plays are tradable, this is not the kind of setup where we show you a bottom that there's a momentum move and then the next leg down happens on slowing momentum. No, this was a breakdown from a top, and that was the momentum. Historically, the expectation is another wave to the downside, that where prices come down to another level to where the distance between the lows gets closer, and that's the slowing momentum. So if you go back and look at what happened, it's the end of February into March, where stocks sold off, and the ones that are bottoming and have been bottoming and have kind of been flipping up over the last week or so, you see a momentum move, and then you see a second one, and then it starts to slow down and making the turn. Whereas this is just the start. So it's an observation. right? None of us know what's going to happen over here on the right side where there's no bars, but we know what happened here, and we know past patterns and so on, and where this is occurring within a location and so on. So there's a lot to understand, no doubt, but that's what we do. All right. Of course, it can be learned. That's what school's about, right? Courses. Oil popping up, and energy stocks found a little life. And we talked about that earlier in the week. Gold is improving, looking good. Looks like it can continue to move higher. Silver, it's closer to resistance, so that's probably going to stall. It's been a big mess on the weekly time frame, but maybe it's their time to start to shine a little bit more. And the transport's just kind of dead for 2 weeks now, just chopping sideways, which is okay as long as it breaks out to the upside and not to the downside. So we'll see. All right, Dan, all yours.
All right, I was just putting the trade in here. Yeah, give me 1 second. Sorry, I didn't. Yeah, market is defying gravity again. 1 second, I'm just putting an order in pre-market here. All right, here we go. All our opens are fine. Workday, there was a problem yesterday. I don't see any pre-market prints, but we just need that to close above the short strike today, but I'll be watching it. Kilo Lima, beautiful 1, 2, 3. We got into yesterday. That's gapping up. That looks great. Deer, we have a covered call. I see a couple prints up here. Hopefully they'll get assigned at maximum profit. What else of interest here? Nothing else jumping out much. So let's just go right to gappers. Jose Sear. Yeah, that's an open trade. Yeah, it was a nice little bull flag there. Nice little bull flag, and it's relative weakness with the 180 reversal there. So we're just hanging tight on it. Oh, Fubo, we bought puts yesterday into the close. That's gapping down, so that's working. That's beautiful, beautiful big descending triangle. Yeah, PPG had earnings. It's gapping too big, but so there's, for me, nothing to do with it. But we can watch the sector Shermacrow. eBet, I can only guess of what it does based on the symbol, electronic betting of some sort. And IPO yesterday, I didn't know anything about it, but wow, that's off to a nice start. 22 to 36. Now it's gapping up to 46. Wow. 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 Look, there was something's going on in the betting thing. Caesar's Palace. I don't know, some contract or whatever. Dunking, some contract with the NFL, but no pattern there. It doesn't interest me. So there's our Kilo Lima, ITB. In the journal today, it was an article about, they said $1.3 million, 1.3 million homes that were under, and it's just churning here at all-time highs, regardless of the little pop in interest rates. So housing sector is very bullish. And McGraw tracks, no great pattern, getting near the prior highs. Power, it's better just because it's at all-time highs and it's been resting. So I like power. TTC. Gap's too big, but it had a nice close yesterday. Beautiful close. I wonder if that was some leakage because that was buying right into the close there. There were some confident buyers right there. F and F gapping up to 19 and going sideways. And it looks like hmm, it looks like a buyout. F and F. It's it's just a turning runaway uptrend. Uh, Z, there was an article in a journal today about Z, and I didn't care about reading it, but I just pull it up. So what jumps out at you of interest on Z? We don't have time for a quiz, so I'll just tell you. If Z were to trade above this red bar, then it's a breakout from a bottoming pattern with red bar ignored. No, it's not well, it could be a condor under the red bar's low, McGraw, under it. But what jumped out at me was what I just said. So set an alarm, 30 cents under the high, and that would be a put spread and a directional. Redfin, the cousin was mentioned. That's a nice bottoming pattern. So that I like. I'm gonna put that over here, Redfin. I can't believe even with the market of these highs, we've found so many bottoming patterns. Hence our MT live 9 days ago on bottoming patterns. The one Wednesday obviously was on shakeout patterns, another great topic. Edit gap and down. So see that this would be another good quiz, which I don't have time to discuss right now. But this was an attempted poor bottoming pattern, poor. So, and we went over poor ones in MT Live. It tried right here, it failed, lower high, declining 20, declining 50, 200. Weekly is bearish. So that still is weak. Jim, NVIDIA small gap down. I know you'll tell me there's no pattern. Well, there's no pattern on the daily for a swing, but we can always do day trades if they set up. But no, it's not our type of put spread. It was on the igniting day, and I actually was looking for it that day, but there was insufficient juice because what strike would you pick? I mean, we do not sell put spreads far from the 20. You got to write that in stone. We don't do it. Just a day trade. APP, this went public yesterday. App, something or other. No interest right now, but I like watching. I like watching IPOs. Pfizer was in the news today. I actually thought it would gap down, but saying that for the Pfizer vaccine people, that you're going to need a third shot in a year. Spot, John, yeah, we're already in spot. Put spread looks good. I also mentioned yesterday it was a candidate for a directional, but I didn't figure it as a directional. Bitcoin is down today, so it's going to drag Riot and Mara are kind of the two poster children. But we noticed they were acting weak yesterday, which was a warning sign, or 2 days ago rather, warning, and that's when Bitcoin gapped up to all-time highs. Coin came out, all the fanfare of Coinbase here, and now it's just chugging around doing nothing. ATG we looked at, McGraw. MATX. Oh, good for the bottom line. There you go. That's it. That could be a reason. My initial thought though, Bruce, of why I said it'd probably be down was people may then think, well, then I don't want that one. Why is it shit? I'd rather, that's why Johnson & Johnson I think, I haven't taken it, so I'm just kind of talking that people like, yeah, you know, why isn't one shot better than two or three? It's less aggravation. So that's why I thought people like J&J. So then if you're now saying I need three, it's like, no, give me Moderna now if there are only two. All right, I see this gapping up. Not many good prints. We'll have to come back to you. Martin, I don't like the way you trade, but it looks like it might want to break out. JB Hunt, here's a gap breakout. That's worth watching. Been consolidating all-time highs. So yes, it's gapping up here, but let's watch a pullback. I'm going to put that one in. Put that in a window. That looks great. JB Hunt, Norbert, KGC. Yeah, day trade sets up. That looks fine. I like the red bar ignored. Our KL was the most beautiful one that I found yesterday. 1, 2, 3, 1, 2, 3, 4 with a price void. Tesla, you're asking about. I have no idea what to do with Tesla. Oliver, I don't know what to do with it, daily or day trade. Tick is surging. Wow, 1200 tick. Oh, it's
Maybe time to feed out the IHA under a 5-minute low down.
It stopped out yesterday. Remember, we tightened it on the 15.
Oh, I thought it was the hourly. Okay. Anyway.
Well, it was the same number at the time. Same number. Yeah, Stradavos just said these two lectures were great. I don't know what you're talking about, but thanks. AA had earnings. It's strong. I mean, it's kind of a reverse head and shoulders. Head, left shoulder, right shoulder. It looks higher. See Redfin there falling a little bit bottom right. So, which I actually like. I actually like the reds because then if they turn around and turn green, then all right, Q's getting, things are getting slapped right here a little bit. So let's kind of just chill here. That's quite a bit of selling here at this opening 5-minute bar. Could it reverse in 5 seconds?